AI just became the most valuable market shift since the internet. The industry is worth over $200 billion right now and is expected to grow to around $5 trillion by 2033. That's backed by governments, big tech, and a mountain of real money already being moved. In this video, I'll take you through how to invest smartly in the AI boom even if you've never bought a single stock before. What's driving the AI boom? Let's get one thing clear. AI is not just a buzzword anymore. It's already part of your everyday life. Tools like ChatGPT are changing how we work and learn. AI powers self-driving cars. It runs inside hospitals, helping doctors spot diseases faster. It's behind the ads you see online and the recommendations you get on streaming platforms. All of that means one thing: AI is not coming. It's already here. And the people who invest early in tech that really works will get the biggest rewards. Different ways to invest in AI. NVIDIA is the most obvious example of how powerful this market can be. It recently became the world's most valuable company by market cap, beating out Microsoft and Apple. That happened because the chips they make are used to train the large AI models that everyone's using. Their tech is essential. Palantir is another big player. They build AI tools for governments and businesses to make sense of large sets of data. Alphabet, which owns Google, is working on AI search, AI writing, and even AI tools for coding. These aren't tiny experiments. These are real products already out in the world generating billions in revenue. There's also AMD, which builds AI chips that compete directly with NVIDIA. Their hardware is now being used in enterprise tools and consumer products. That makes them a solid competitor in the space. And there's Meta, Amazon, and Microsoft. They're building their own AI tools and are also buying or partnering with smaller AI companies. This shows that AI is now at the core of what every major tech company is doing. Now, maybe you don't want to buy individual stocks. That's totally fine. You can still get into the AI space using ETFs. ETFs are bundles of different companies. So instead of picking one, you invest in a group. A great example is the Global X Robotics and Artificial Intelligence ETF, known by the ticker BOTZ. It gives you access to a wide range of companies working in automation, robotics, and machine learning. It's been steadily growing and reduces your risk compared to betting on a single company. You can also look at index funds like QQQ or VGT. These funds include some of the top tech companies in the world, many of which are investing heavily in AI. That way, you benefit from the growth of AI, but with more balance in your portfolio. This approach is perfect for people who don't want to check their investments every day. If you're already investing and want to take it a step further, there's also startup investing. That means backing smaller companies before they go public. Equity crowdfunding platforms allow you to buy into early-stage businesses. But be careful. These types of investments are much riskier and should only be done with money you can afford to lose. They also usually take years to pay off, if they pay off at all. How to choose the right AI investments. When you're choosing which AI investments to make, it's important to focus on long-term value. A lot of people jump in because they see headlines or viral trends. That's not the way to build wealth. The smarter move is to look for companies with real products, real customers, and actual income. You want businesses that are using AI in ways that solve real problems. That could be speeding up medical research or cutting down the cost of customer service using AI chat. Don't get pulled into hype. There are always going to be new companies promising the next big breakthrough. But without revenue and a working product, that promise means nothing. Do your research. Look at their finances. Look at who's backing them. And always spread your risk. That means owning a mix of stocks, ETFs, or funds. If one company fails, it won't take your whole portfolio down with it. Also, be careful around so-called meme stocks. These are companies that get attention on social media, but don't have the numbers to back it up. They often spike fast and crash just as fast. It might look exciting, but it's gambling. That's not how serious investors build wealth. how to start investing today. Now let's break down how to actually get started if you're brand new to this. First, you'll need an investment platform. Interactive Brokers is one of the best places to begin. They offer access to global markets with low fees and great tools. If you sign up using the link in the description, you can get up to $1,000 in free IBKR stock. That gives you a head start from day one. Once you've made your account, it's time to search for your first AI investment. You can type in names like NVIDIA or Palantir, or just look up the BOTZ ETF or QQQ index fund. Choose what matches your risk level. If you're not sure, start with a fund that spreads across different companies. When you're ready, you can buy shares. Many platforms allow you to buy fractional shares too. That means you don't need hundreds of dollars to get started. You could start with $10 if that's what you have. The most important part is getting in and starting the habit. After you've made your first investment, think about setting up an automatic deposit. This is where you put in a fixed amount every week or month. It's called dollar cost averaging. Over time, it smooths out the ups and downs of the market and can lead to better returns. This method also removes the pressure of trying to time the market, which almost nobody does well. There are risks to be aware of. Right now, AI stocks are priced high. Some companies may be overvalued. That means you could buy in now and see the price drop in the short term. That's why it's important to stay focused on the long game. Investing in AI isn't about trying to double your money in a week. It's about holding on to quality assets while the market grows year by year. There's also the risk of new regulation. Governments around the world are already looking at how to control AI, especially when it comes to privacy and data use. That could slow down growth in some areas, but it could also help companies that build AI tools that are more secure or ethical. Another risk is competition. New companies are entering this space every month. Even top players can fall behind if they stop innovating. That's why it helps to spread your money across different parts of the AI market. For example, one company might lead in hardware, while another leads in software, and another focuses on medical AI. There's also the chance that a completely new technology could change the game overnight. AI is moving fast. That's both the opportunity and the challenge. So don't try to predict every winner. Build a mix of investments that gives you the best chance to benefit from the overall growth of AI. At the end of the day, investing in the AI boom is all about making smart, steady moves based on what's real. AI is becoming more important every day. From the apps on your phone to the way major industries run, the companies leading this change are going to be some of the most powerful businesses of our lifetime. That's why getting in now, learning the market, and making smart investments can give you a serious advantage later on, but only if you stay focused on long-term value and not short-term noise. Which AI stock or ETF are you most interested in right now? Let me know in the comments below, and don't forget to like and subscribe while you're there.